Hi, everyone. Welcome to the New York City Airbnb Host Online Meetup. For those of you who just joined, we're going to be getting started in 2 to 3 minutes. We're expecting anywhere from 30 to 60 people on this call, so we just ask everyone to please keep your microphones on mute throughout the meetup. If you do have any questions for the speakers, just throw them in the chat box there, and we'll make sure we address them at the end of the event. There'll be a Q&A session, so I'll read the questions off and the speakers will answer them. The event's going to go to 7:30, and we'll do our best to cover all the questions. But if we don't get your question answered, you can always post it in the Facebook group, and I'll be sending out the presentation afterwards if you want to reach out to either of the speakers. And for the last 15 minutes of the event, if anyone wants to stick around, we're going to do the breakout rooms in Zoom, which allow us to actually break this into smaller groups of 4 or 5 people, so people can chat amongst each other and try to replicate the in-person networking as much as we can. I see a couple more people just joined, so we're going to get started in about a minute. Just a quick reminder, please keep your microphone on mute throughout the event. And if you do have questions, just throw them in the chat box and I'll make sure that we get to them at the end of the speaker's talk. Okay, so. Okay, so let's go ahead and get started. So I just want to introduce our 2 guest speakers, Rebecca Converti and Ellie. Did I butcher your guys' last names?
No, good.
Ellie Paget from Home Slice. Paget?
That one you did.
Okay, from Home Slice Stays. Rebecca is a real estate investor, syndicator, developer, fix and flipper, and vacation rental property owner. And she's been pursuing real estate full-time since her 30th birthday when she left her full-time job. And she also worked on a glamping resort. Ellie is the founder of Home Slice Stays, and she's a designer in the vacation rental industry with a proven record of adding value through experiential design and exceptional hospitality. Her designs have been featured in over 200 properties, from modern downtown condos to state-of-the-art hotel projects. And she is an advisor of Astro, a vacation rental community, and a partner at Elevate. So I'm going to let the speakers go ahead and kick this off. So Rebecca, I'm going to transfer it over to you so you can share the presentation.
Awesome. Thank you so much. We are just absolutely thrilled to be here with Mike and all of you who are watching. We really appreciate you taking the time. I'm going to go ahead and share my screen. Hopefully you guys can see it. And we'll go ahead and get started. So Ellie and I are absolutely love having all of you here. We have a Airbnb management, design, and investing company here in Phoenix, Arizona. We specialize in this particular market. And I will just let Ellie just tell her a little bit about herself and just what she's passionate about in this space. So go right ahead, dear.
Hey everybody, welcome to the Zoom meeting. Thanks for the opportunity to speak here, Michael. It's so gracious of you to allow us to be in front of this audience to talk about Home Slice. Yeah, Rebecca and I have been working on Home Slice for the past year and a half or so, and it's been just a whirlwind of a journey. I'm pretty sure that everyone's been experiencing the same. But Rebecca, we should just get started so we're not wasting anyone's time.
Yeah, absolutely. So this is just a little bit of pictures of some of the design work that we've done and the projects are currently out there. This really showcases Ellie's work and just some of the amazing things that she's brought into the vacation space, really elevating overall the experience that people have and honing in on the, that balance between being in a home and being in a hotel. So we try to really make sure that the experience of our guests is elevated to that point of feeling that, luxury hotel feel. So before we get started, I really want to talk about market trends. I feel like these are super helpful when we're talking about what's going on in the market today, and how we analyze properties has everything to do about the health of the market with which those properties exist in. So obviously you look at investing in Airbnb is the same way that you would anything else. You want to see what your cash on cash returns are. You want to look at occupancy rates. You want to look at appreciation trends, and you want to look at the popularity of the destination as a whole. So I'm going to start off with a little bit of the bad news. We'll just talk right now about what's happening in the market for travel. And a lot of you are going to be like, why would I want to get into travel investing? We all know that it's tanking. So that's true. It is going to come back, but right now we need to be realistic and know that there has been a tremendous drop in travel. Domestic travel spending forecast has dropped 40%. And the free fall of spending is about 75% overall. And this just kind of gives you some of the most up-to-date statistics on what's been happening since COVID due to the travel industry. There is a silver lining, however. The vacation rental industry as a whole has not been hit anywhere near as hard as other areas of vacation industry. And I think that that has a lot to do with the fact that people still want to get out of their houses. They're feeling cooped up. They're feeling like life is just really difficult right now being in one spot all the time. And so going to another house that's secluded, that has wonderful amenities and a private pool sounds just fine. And so people are looking at that as an alternative to some of the other like hotel destinations that they've looked at in the past. And they're also driving rather than flying for the most part. So we're seeing this in the trends, even though overall a lot of the things that you do when you travel have been canceled, people are still interested in some sort of travel experience and they're looking at different places to do that. This is about a year old, but it hasn't changed by much. And these are the 10 most profitable places to invest or own an Airbnb rental. Scottsdale, Arizona is number one in the entire United States, and that happens to be where we are at. So let's
Rebecca,
talk.
I'm not sure if other people, I can't see the presentation on my end. I don't know if other people see it as well.
Yeah, I was actually going to say, I was like, I don't know if it's me but I was like, this is all kind of working. I was texting Michael. So I think we should like dial back the presentation and start over.
All right, is this working now?
Yes.
Yep. Now you're good. Yeah.
Okay, so sorry about that, guys.
I was
You were supposed to see these beautiful photos all along and not just me talking. So my apologies. All right. So beautiful Airbnbs. Fabulous Ellie. Rebecca is presenting. Here is some gorgeous design.
Okay, now I'll go. Design project. Scroll back up. Scroll back up to the design stuff. Okay, so this is the design projects that we've done. As you know, it's really interesting. Airbnb started out as a technology company and then shifted into understanding that there's a merge of experiences.
Watching the presentation.
So we started just creating a beautiful experiential product. Like right now, being an advisory board for the Tree Walkers campaign, you can see this amazing pine cone that we're actually going to be picking up to start managing fairly soon. And what's really important is that when you have amazing design, you can increase the nightly occupancy rate by 40%. So it draws you in, it wants to take you there, and it sells, which is part of the product. So
absolutely. And now that we're having fun with design, let's talk about property management and where to buy. So here is a bunch of information. So this is information that I pulled recently regarding what's happening in the industry. This is up to date as of July, which is, we're not too far on the other side of that. But this gives us a little bit more about the market trends and what's happening in the industry. Travel industry is set to lose a total of $500 billion in 2020. So it's just important to kind of know what is happening in the industry as a whole, and then how Airbnbs are different. And how that is coming back faster than some of the other trends. And then this is the top 10 most profitable places to own an Airbnb rental as of last year. It hasn't changed dramatically. So just so you know, this is actually still pretty consistent with what's happening today. And then this graph, and you guys are all going to get a copy of this so you can look at it in more detail and really dive into it. But AirDNA was able to provide us with these statistics, which I think are super helpful. And what this shows us is a forward booking index. So forward booking index tells us, okay, based on last year and based on, how people were spending and traveling last year, looking ahead of ourselves, and that next 180 days, how well does that line up with what was happening last year at the same time for forward booking? And what we're seeing is that for national 90-day occupancy, there's only about a 2.6% drop versus 2019 levels for Airbnb. That's really good. That's really good. That's tremendously better than what we're seeing in the hotel industry. That means we're almost back to the same place we were last year as a nation. So good news. All right. So that is happening. But certain areas are definitely doing better than others, right? So Arizona is doing significantly better. Arizona is 90% of occupancy June 21st reached. We reached. So pretty much growth over a year is 26% growth. That's really good. So that's really what you want to know about Arizona is that since last year, we're seeing a tremendous growth. Unfortunately, New York isn't doing so hot. So month over month, we're seeing definitely doing better. It's starting to come back here recently, which I'm glad to see. However, it's still a 52% difference negatively since last year. So there's been a 52% drop year on year for occupancy in New York. The Phoenix metropolitan area. So this just kind of tells you what's going on. If you want more details on this, I'm more than happy to send over the article that I pulled these from. There's just a lot of good details out there about the market trends overall. So let's talk about the Phoenix metropolitan area revenue trends. Revenue trends tell us what the averages are. Now, Ellie pinpointed something really, really important, and that's that design has a tremendous effect. What did you say it was? 40% increase on income. So these, we can tell you what the 75th percentile is doing and what the 50 percentile is doing, but we can't tell you based on design the difference that these are making overall on this big of a scale. We can do it on an individual scale. So we can kind of look at this a little bit farther, but this really shows you like how much income is a average 1-bedroom making versus a 2-bedroom versus a 4-bedroom versus a 5-bedroom, right? And that just kind of tells you what is available in the market for income based on the number of bedrooms that you have in the Phoenix metro area. And I can do that for anywhere in the country. Just so you know, this information is available anywhere. I'm highlighting this market because it's one of the best performing markets in the world. And we happen to be here and we specialize in it. So it's why I'm highlighting the Phoenix metropolitan area. So I'm going to show you guys a little bit about how to underwrite and how to really look at the details for Airbnbs through a company called Mashvisor, which I really like. A lot of people like AirDNA. I particularly like Mashvisor better just because I get more statistics and their history goes back further. But everybody has, if you've got something that works, they say stick with it. There's always going to be discrepancies in the information, and you have to be able to do a deep dive to really look at the details and anything happening in any market. And it's important that you do get granular. And so anything that allows you to get granular is going to help you significantly in what you're going to be able to create. So anyway, we'll talk about Mashvisor and how we look at these properties. So when I look at the market, what we want to know is who's making the most money, what is the price per night, and what is their occupancy rate. And with those very specific details, we can go in and actually recreate what's already been done in a positive way, right? I want to go buy something. Well, I'm going to buy something that's already really popular and I know I'm going to make money off of. You don't do that, you're less likely to get something that's going to work. So what I do after I figured out those 3 things is I want to figure out what's different about those particular properties than anything else. So what makes them special? So I went through and looked at this particular market that I'm highlighting for you, and what I found that makes them special. There are 4, 5, and 6-bedroom homes. None of them were 3-bedroom homes. They were modern and inviting. They all had a pool. They used the color blue a lot in their photography. They were fun activities for guests to enjoy while they were there, not only the pool, but like pool tables or ping pong tables or something fun and inviting to do during your stay. All of them had white bedding. They looked hotel style. They looked like they were maintained to the level that you would want in a hotel. And their nightly rates were between $400 to $600 a night. So that was what I was able to highlight in this particular market. So the next question you have is, okay, well, if I know that I can make $4 to $6 grand a month, and I know that it has to be a 4-bedroom, and I know it has to be a pool of 4-bedroom or more, and I know it has to have all these different elements, how much should I be spending on that product, right? If I'm going to go in there, I need to know what my max spend is going to be. I use a rule of thumb that consistently, and pretty much what I say is that the total amount, you want your income on that property to be 3 times what your costs are, but really just the mortgage, tax, and insurance cost, right? So whatever your mortgage, tax, and insurance costs are, you want to have income established at least 3 times that number. So what does that look like on paper? All right, so we'll just kind of give you a breakdown here. So if I buy a $150,000 home, I know that my monthly costs are going to be about $925 a month. So I want my income to be at least $2,775. And I better be able to establish that with comparable properties in that area. If I can't show that with comparable properties in my area, I don't want to buy it, right? Like you need to be able to show a comp set that shows that. If I want to spend up to if I'm going to spend up to $600,000 because that's what it's going to cost for this type of property, then I better be able to establish at least $9,600 on average, because it's going to cost me $3,200 per month for just those 3 things. And to be able to have a good profit margin, you need to use that rule of 3s. So here is an evaluation on a couple different properties, and these are pulled from Mashvisor, and then I just kind of ran the numbers, and I'll show you how I do an underwriting calculator in addition to what's available out there for just regular information. So this top property was on Heatherbray. It's a 4-bedroom with a pool. It's got everything that we wanted. We know that it's going to make at least $6,500 a month. The expenses are going to be about $4,757, including everything, right? Including your maintenance and electricity and all that other stuff. The cash flow on this property is about $1,750 a month. So it's a 15% cash on cash return, which is a good deal. So that property is not available anymore. But when it was a pretty good deal on the market. Here's a couple other, what I did to be able to figure out, make sure it was going to be worth buying, is I grabbed a couple comps. And so this is a comparable property, and this is a comparable property that are already active on Airbnb compared to this one. And this property, the first one, is performing at 75% occupancy annually. Its nightly rate is $381, and its average monthly income is $8,500 or so. The next one has an 80% occupancy with $242 as an average nightly rate, which is quite a bit less, but it's getting a much higher occupancy, which means it's leaving some money on the table. 65 to 75% occupancy is great, and you can push your nightly rate when you do that as well. So this one's could be making a little bit more, but at least it's already making about $6,400 a month. So that tells us we're in a good spot, right? We know that this property is going to perform somewhere between those 2 numbers, between $6,400 and $8,500 a month is about what we're looking at. So spending up to how much? I don't remember how much this property cost, but I want to say it was around $580,000. So we would be in a safe spot. All right, I'm gonna try to scroll down. I can't. It's frozen. There we go. Maybe not. There we go. All right, so now that we've gone over some of like the properties, I want Ellie to really highlight how to stand out of the crowd when it comes to marketing and design. So Hannah, I'm gonna let you go from here.
Thank you so much. Yeah, I think that, we're designing a product that speaks to, like, in real time, you're going and you're staying somewhere. Like you want to really be in the other person's shoes. So when you go to a place, you want to be able to, like, you feel from the moment you're searching, something's drawing you, something's pulling you. You feel like you can trust that person. There's like a myriad of factors that come into play, but mostly the first thing is, how do we catch your eye? How do we get you to, like, pay attention to us? And I think that design really plays an important role in that. So Airbnb back in 2008 was like, I'm switching over to this concept of presenting unbelievable high definition photos, and it completely changed the landscape. Suddenly it took it from, like, just a rustic kind of boys trying to figure out, like, a small business to a really luxury product. And so what we do is we really like to elevate our properties by adding really incredible design, getting people enthusiastic, like evoking this sensation and feeling of enthusiasm. It's really important for us when we're doing that. So photography is a major key in increasing your profitability.
Yeah.
The other thing that we like to do is we like to create a point of view that that speaks to our audience. So whether it be a combination of colors or a brand or a concept, we really like to encourage the human aspect of feeling. And so by, building, like this is one of the ones we did for a hotel in downtown, we, even the font, even down to the font and what that tells you about that property is really special. And it doesn't have to be incredibly expensive either. All this stuff looks expensive, but we do it on a dime. You can find things at like a thrift shop, as long as it has a cohesive story. And that's what's really important. It's about the story. We want to be able to create the story about, and also share that. It's woven together. It's all interconnected.
Yeah, absolutely.
And then, maintaining that along your properties. Anytime anyone has a portfolio of Airbnbs, you know that it's really personable to you. So maybe you are like me and you are first, born in Taiwan, but your parents were, from the US. And you have this multicultural background and you want to really showcase that. So sometimes I like to use really bold, eclectic features of red. So in this one, this is an example of red in Taiwan that's considered a color of fortune. And then I also like to bring in this kind of old school rusticity from my dad's era because he was a Green Beret. So it's kind of I like to bring those two worlds together. And it's a privilege for me to design for the people that stay in our homes. It's like giving them a gift. And so being able to purposefully think about that and also have somebody, help you kind of put it in a little package is really nice. It creates a tremendous amount of wealth because really in that aspect, you're thinking boldly, you're thinking creatively, and you're thinking freely, and you're thinking about the other person coming into the world and coming into their shoes and seeing it from your eyes. It's a really special experience.
It's awesome. And there we go. Awesome. So that is absolutely beautifully said and so true about everything that we create. And so one of the things that we've done is really work to create dynamic partnerships with other teams to be able to bring the best of all worlds. We know that dynamic pricing is another really important tool to use when we're into the space. We want to know how everybody's performing. We want to make sure that our pricing is in alignment with what's happening in the market. If a particular day isn't that popular, we know that in advance so that we're going to lower our rates to try to get who is coming to visit into our properties. If a day is particularly popular, we're going to make sure our rates are at the top of the market and we're going to hold fast because we know we're going to be able to get that money. We know that people are biting at the bit to get those properties and we're going to ensure we get that highest night price per night by doing that. So we work with dynamic pricing teams. Beyond Pricing is one of my absolute favorites because of their customer service and the level of intention that they take in making sure that their product is well priced. I found that a lot of people have a concept of, well, we do a really great job of providing all the dynamics and all the numbers, but then you've got to figure out how to do it on your own. And they kind of leave you to your to figure it out, but they give you the insights that you need. Beyond Pricing does one step further. They actually personally monitor the success that you have on a week-to-week basis, and they help you ensure that your pricing is correct and that you're always making those little changes, whether it be 5% here or 10% there, to ensure success. So I really enjoy working with their team, and this is one of the teams that we work with on a regular basis to ensure that our product is performing at the top of the market and ensure that our clients are really happy and we're really happy with what we're getting. So this is our contact details, and you're going to be able to get a copy of this. But from here, I kind of wanted to switch into showing you how to actually look at a property and figure out whether or not it's a good buy or not. So Mike, you good with that? Cool. All right. So you are getting a copy of this underwriting tool that's going to be sent over to you. And it's going to show you kind of like my plug and play ways of coming in here. Your rules of thumb are in here, so you can look at that. And I know all of you are wondering, well, thanks for all these details, but how the heck do I fill it out? So we're going to fill this out with an actual real live example. So give me just a second. I'm going to pull up my other screen. And what I did is I wanted to find a property that would be worth looking at here in our area. And this property happens to be in the Islands. It's this one right here. It's 424 South Bayshore Drive. It's got a purchase price of $475,000. So the first thing we're going to do is put in a purchase price of $475,000. Our down payment is automatically going to be 20% on here. Not everybody's going to have a down payment of 20%, but that's pretty common, so it auto populates. Your mortgage is then $380,000. The average interest rate for Airbnbs right now is 5.5%. I've seen it less. I've seen it as high as 6.5%. Depends on who you work with, and if you need a mortgage, somebody to work with for mortgages, we have them, right? We have some wonderful relationships. So if you need any help on that, let me know. Monthly payment, it comes to $21,858. So we know that your property taxes, well, let's go figure out what the property taxes are on this particular property. Give me just a second. So I'm going to scroll down and I'm going to figure out, we've got an HOA of $49 a month. And now granted, we don't like HOAs, just so you know. If we can avoid them, we will, but not all HOAs are bad. But this one's $49 a month. And let me see if it'll show me, oh, payment. Okay, so property taxes are $334. So we're going to go over here. We're going to type in $334. I think it was what, 45. And insurance is going to auto populate. So $89.32 is what your monthly payment would be. If we multiply that by 3, it comes to $87.97. So we have to figure out, like, is this a property that we would really want to get into? Now, closing costs are automated at 2.5% of the purchase price. It might not be that high, but that's what we estimate it at. Renovations, we've got them at about $5,000. That's pretty typical, especially if you're doing paint or painting a little bit of flooring or painting a little bit of work on the yard. It might be a little higher, it might be a little lower. Design estimates at $25,000 for a 4-bedroom, and we know your sheets and towels and so forth are $3,500. Now, design and furnishing includes your plates and cups and holders and napkins, like everything you could possibly need to walk into a house and just relax and be able to make any meal you can think of and open a bottle of wine. That's in a house. So you want to take that into account. Like, a lot of people are like, well, you know, what am I spending? Like, know that it's everything, absolutely everything you need to have, and, you know, really have the space that you want. So your total cash cost is going to be in the down payment plus everything that you're putting to get the house live, right? And that'll be more or less, this is what you're looking at. So that gives you that number. Now we hop down. Property management is typically 20% of your income, your revenue, nightly revenue. So this is automatically based on 20% of this number. If this number changes a little bit, that number will change, right? But just know that that's 20%. Your mortgage payment is this, right? So whatever this is what the house payment is going to automatically populate. Arizona has high utility bills. I don't know if anyone knew that. We spend a lot on AC here, but it's a lot of money, like, just so we're all on the same page. And on top of it, pools cost money. So your electric bill is a little bit higher. It's averaged at $425. It might not be this high, but I'd rather overestimate rather than underestimate. Almost no homes have gas here. Some do, you know, and my home has gas and we pay $28 a month for gas. So it's not a high fee, even if you do have gas. It's just knowing that if you do put it in there. Water, trash, and sewer is about $100 a month. Internet's about $120. So these costs come to about $645 a month. Pop down, we've got pool maintenance, yard maintenance, consumables like, you know, consumables that aren't covered by housekeeping. We do things a little bit differently. We cover a lot of the things that other companies don't. We cover, you know, toilet paper and paper towels and shampoo and conditioner. Most companies don't do that. So that would be considered a consumable. Other things that are consumable are, besides laundry soap and just regular, you know, cleaning supplies. For the most part, that's what they are. General maintenance, we have estimated $100 a month. It might not be that high, but it's good to put that number in there. And then I always suggest you set aside money for CapEx reserves in the future. You know, holding on to a property for a long period of time is the smartest thing you can do. Real estate, it's going to go up over time, and this is cash flow, right? We all want cash flow in our lives that just shows up in the mailbox without having to do any work. Everybody wants that as a, thing to happen every day. So keeping these properties makes a lot of sense, but they're not going to perform well if you're not continually updating them, right? We all know that designs change. What's aesthetically pleasing changes over time. We know that couches get worn out. We know mattresses need, we have to have room to be able to go back in and do more work in the future. This adds up nicely over a 5-year window, right? So if you go in and do a nice redesign and freshen up every 4 to 5 years, then this money is going to be there for you to do that. And you're not having to keep putting money back in. So I consider that a cost, and I just bake it into the numbers. That way we have room to do it later. So this total property cost is going to be about $6,000 a month. So if we know our monthly costs about $6,000 a month, we'd like to make a couple grand a month, right? That would be nice to be able to put a couple grand a month into our pocket. So let's see if that's realistic based on the comps. I haven't finished going through these comps yet, so we're going to just have some fun with it. So right here, we know the market. This particular neighborhood is called the Islands. And in the Islands, the average occupancy rate is 68% on an annual basis. And I want to go see what are the best performing properties in that area, because we're going to be one of them, right? And these are just based on Airbnb for the last 12 months. How have these properties produced over the last 12 months? So this particular property, what do we know about it? Okay, that's not that one. It's, where did I put it? Nope, not there. I should just delete that one because it's in my way. I can't see, this thing is blocking. Is this it? Yes. Okay, we know that it has a pool. We know that it's on the lake. We know that it has 4 bedrooms and 2.5 baths. We know that it's a little over 2,000 square feet, and we know we need to do some paint and maybe some flooring, but overall it's a really great space. So how does that compare to other properties in the area? Well, let's see. This one is doing really well and no longer available. So that one's making about $12,000 to $15,000 a month. This one, let's see what else is doing really well. This one's doing really well. And it's also no longer available. Well, let's just go to the ones that are doing really well. This one's doing really well. This one is making about $600 a night. And I was looking at its numbers. It's making about $9 grand a month on average. And this is right around the corner from the other property. It's got 5 bedrooms, which is nice, but it's only got 6 beds. We can totally put more than 6 beds in a 4-bedroom. And that's one of the biggest things people are looking for, is how many guests can stay there, right? And does it look good, right? We're not going to stick bunk beds in the living room. Okay, we're not like that, not to that level, but we're definitely going to utilize bunk beds and trundle beds and ways to be able to get more guests into the space in a comfortable fashion. So we know that this is a really good comp. Another fantastic comp is this property. It's doing a little bit less on average per night, but it's still pulling in an average of $7,000 a month. So we've got one property right on the lake making $9 grand a month, and one property not right on the lake, but with a gorgeous pool and some really pretty aesthetics doing about $7 grand a month. So let's just say on average, we're looking somewhere between those two. If we go back to our calculator, we've got it at 8,700. So let's be good and let's just decide we're going to do it at 7,800. Does that work, right? It's not quite as high as we want, but it's $7,800. What is going to be our return on investment? So all I'm going to do is goes equals this minus, or actually it's plus because I have it as a negative number, plus this. So our average return, it's $2 grand a month that we're going to be making in profits per month. Now, it's not quite my number, right? I'd like it to be about $8,700 a month on average, but even at $7,800, you're making $2 grand a month. Most people are going to be like, yeah, I can do that passively. I can make an extra $2 grand a month passively. Now, what's my cash on cash return? Well, we're just going to look at, so this number is going to be your total cash in. You take your expenses. You can figure this one out pretty much what you're going to make. So 2,000 equals 2,000. So this times 12. And then we're going to divide it over the total amount you invested, right? Which is the 128,500. It's an 18.7 cash on cash return. So 18.8. So not bad, right? Not a bad cash on cash return. So this is how you use the calculator. And I'm more than happy to help because I do this stuff all over the country to highlight the best properties to invest in. But we can open up for questions now. So go for it, Mike.
Awesome. Thanks, Rebecca. Let me see what questions we have here. Someone was asking if there's a way to see how much a property makes on Airbnb, or if you have to use a tool like Matchvisor or AirDNA.
So Airbnb is not going to give you that information on a 12-month basis. You have to use a tool to be able to get that type of history. The only thing you're going to be able to figure out on Airbnb is what it's booking for, like say in the future, right? I'm like, oh, I want to know what it's going to cost me to rent this property next month. You have no idea what their occupancy rate is. You have no idea whether, what their history is, how long they've been around. You just can kind of gauge, okay, well, in the future, this is what this property is booking for, and it looks kind of like the one I have. It's way too hard. Don't bother.
Fair. So a lot of hosts in this group are from the New York market, so they're pretty familiar with the apartments and renting something in a multifamily and lease arbitrage. Is there any things that they should consider if they're looking at a market that's more focused on single family homes like Arizona when looking at the numbers?
When comparing it to multifamilies, right, it's just a different product with a different scenario, right? I mean, multifamily, there's a lot of similarities, right? You still want to know what your occupancy, what type of neighborhood it's in, right? We do not, multifamilies are A, B, and C markets, right? That's kind of in D markets. Hopefully you're not in any D markets, but we're really looking at A properties, right? These are A properties in A markets because that's where people want to visit. Right? People aren't going to be like, well, cool, we're going to stay. And, there's definitely a lot of areas that we won't even look at for property management or marketing or for management or buying, right? We won't do either or. And that's just because they're not like your top of the line markets for people to want to stay. So that would be one variation, is that there's not like a B class that I'm like, sure, go do this. Like there's a super A and then there's an A minus, but there's not we're not going to go below that. I'm trying to think of anything else. Everybody
pretty much on this. I think that, what's really cool is right now we're noticing that with Airbnb, Joshua Tree right outside of California and San Francisco has become a really hot market. Like every single night has been New Year's Eve prices. So they went from being around, I don't know, $400 a night or so, and now we're consistently getting around $900 a night. Pulling in those around 20 grand a month for a single family house, and it's kind of extraordinary to think this small little quiet town that is pretty bohemian and boring considerably to most is now booming and just absolutely pulling in higher numbers than we can even imagine. And a lot of people we're recognizing in Phoenix are moving here from bigger metropolitan areas because the price point's really good. It's easy, you can get more bang for your buck. You get more food for your dollar, which is also a cool thing. So I think these secondary markets are really intriguing because, I mean, for God's sakes, there's a house next door to my apartment complex that has an incredible, and it's a multifamily unit that they renovated, and it has a pool there, and you can sit there in the winter months and have another home inside a major city, and you're able to have those fluid experiences, and it's just breaking in those numbers. It's absolutely sensational to take it away from multifamily now and think about multifamily in a way where not touching it and letting the market season again, I think might make more sense, especially now because we don't know. I mean, it's kind of precarious, but luckily with people like Rebecca and Michael, I think we'll be in good hands.
You just hit on something that I thought about. One thing that's kind of been scary about multifamilies is the delay on rents, right? Like the rent freezes that have happened recently in the market, telling people that, you can't collect rents, which is insanity. One thing that's really nice about the vacation rental industry is that we don't have to, people are in and out right? You're in, you're out, you're in, you're out. These are not long-term leases. These aren't, nobody's going to come in and say, you can't let these people, these people can't leave. Well, maybe in California, but that's not happening here. For the most part, you don't have to worry about anybody coming in and making it so that you can't like collect rents for what you're getting, because people are paid in full when they walk in that door, right? They are paid in full upon entry, and then they're out, and they're out very quickly. The other thing to keep in mind is what we did this last year was there was this huge shift that happened, and all of a sudden we were super worried about what was going to happen with our occupancy rates, because we were seeing cancellation after cancellation after cancellation. And so what we did is we went and canceled the rest. We said, look, we got to get these off our books. These people aren't going to be showing up. We already know that. And so we canceled the rest of the onesie, twosie reservations and put in 30-day stays. And for that short period of time, that worked because people were able to stay for 30 days. We were still able to capture a good amount of money. And it kept the properties going during that shift where nobody knew what was going to happen. So that's another thing that we have flexibility in, right? We can still do, it's still a corporate stay, right? It's still those other things. It's still a furnished rental. You're still going to be able to make some good money. I know one of our properties who's talking is like, well, if it's just a furnished rental, I make $7,500 a month. And if it's a vacation rental, I make $12,000 a month. Well, he was okay in either position, right? It didn't matter which one happened. He was going to be financially okay. He just likes one better than the other. So do I. Everybody does. But at least we're financially stable one way or the other. And that's what really matters.
Okay. Another question just came in. Do you guys have any insights onto ski resort areas post-COVID?
They're doing well. So overall, these markets that were traditionally like your getaway markets, right? The only certain parts of the year, those types of markets are doing extraordinarily well. So we're seeing a huge increase in people going there all the time because they're just trying to get away, right? Everybody wants freedom. They want to breathe. They want to get out of their house. They want to be able to go to the store and it not be a big deal and wear a mask and all these different things. Like they really want to have that freedom. And in these smaller markets that are luxury, they're just doing well. Luxury is doing well overall. And that's what we're seeing over and over again right now.
Yeah, that couldn't be more true. I mean, our criteria, our base is generally like 4 bedrooms with a pool, just because we like having enough space, but it doesn't need to be crazy massive, like a $3 million home. Although if you put a lot of heads in beds, sorry, my son, you should generate some pretty significant returns.
Awesome. And the other question that came in was around subleasing and kind of lease arbitrage. Do you have any insights into that, and if certain types of properties tend to work better for that versus others?
Yeah, so subleases are totally an option for doing it. I think that ownership works better because you get to build your equity, right? And otherwise you're just giving that away. And there's a lot to be gained over time. There's a lot of people are doing arbitrage as well. And Ellie, I know you have a lot of insight on this because there's some companies that have struggled tremendously because of those contracts over the last year, some of which are no longer in business. Yeah. So Ellie, I'm going to let you talk a little bit more about that.
Oh yeah, I mean, you look at companies like Sonder or Stay Alfred who were based on the lease arbitrage model, and then when the market tanked and there were no reservations, they were suddenly leaving these properties completely empty, and just running away from their leases. And so I think that there's a risk factor there. And plus, I feel like you can only really get so big with an arbitrage model. You can only have a 2-bedroom condo or a 1-bedroom or something like that. And usually it's like in the middle of the city. And those generally work. Like if you have but you can also buy a condo in the middle of Seattle and have the same thing. I mean, you can get a houseboat and have that houseboat and it make more money, and then you sell it later for more money. So you're making money, it's paying for itself, and then you're selling it for more money. But the arbitrage model, I think, works if you're doing it strategically and you have, again, like a really good margin. Like, you're only paying $1,000 a month, but you're maybe getting like, $3,000 a month. It's kind of the same thing. I'm not really familiar with arbitrage myself because we've been in the revenue management model for so long, but we are now shifting over to doing an equity model where we will help owners buy properties and we'll own it 50-50 with them. So it's a really cool thing. And I think maybe we should touch on it a little bit. Rebecca, what do you think?
Yeah, well, definitely get in contact with us. We have some amazing opportunities available, and we're working to make sure we get properties under contract that are not necessarily on the market right now and making sure they're renovated correctly. We've started working with developers and builders to make sure we're getting the right product and we're having it when nobody else can, specifically for what we want, right? Lots of glass, lots of open space, lots of beautiful pools, a nice hot tub area, right? We want this to feel like your own little mini resort. And so we're working with builders to make sure we have that product available in the key markets. And we're bringing in investors to be able to take part of that passively and make excellent returns. So anyway, that's something to definitely talk with us about if you're interested in looking at this, but you're not really sure. You want to get your feet wet and you want to get into it, but you don't necessarily want to manage everything yourself and have the risk factor. We are creating a product that really helps ensure that that doesn't happen. So we would love to help you.
I think I know the answer to this next one, but if you were to invest today, where would you go?
My own backyard. No. Another great place. I mean, Ellie touched on it just a little bit. Joshua Tree is a great tertiary market. And I am all about markets like that. But my fear is markets that don't have a lot of history of being amazing, right? I think it's going to continue being really good, but I don't know. And I like markets like my own where, Scottsdale and, the whole actual Phoenix metro area and quite a few areas of it has just performed well year after year after year and is doing good. And I don't see that going anywhere. And so this is a great place to invest. Another one that I'm working on right now, Miami, has some really great investment opportunities in it. And so I've been looking at Miami. And then Austin, Texas. Actually, Texas as a whole isn't doing bad. You just got to find the right products. But Austin's still a great market. A lot of stuff shut down right now, right? 6th Street is shut down. A lot of the fun things that people do, it just isn't available at the moment. But there's still quite a bit of movement and there's still a lot of people that are coming in and staying. And so you can still keep occupancy rates as high as at 80%, which is amazing.
Awesome. Well, I think that's, oh wait, there's one more question just came in. Pre-COVID, I was looking at Myrtle Beach and we were finding units with a 40% cash on cash return with AirDNA numbers. What are your thoughts on the Myrtle Beach market?
I've looked a little bit at Myrtle Beach. It's not bad. What I would say is we just have to get granular with it, right? I mean, I won't throw out an opinion out there just because I haven't done a ton of work on it. But if we get granular on it, then we can really see if those are real. I've had investors tell me that AirDNA does high, like their numbers are high compared to what you actually see. I like Mashvisor because it's always low. So I'm like, you got one or the other, high or low. It's somewhere in the middle. But we just have to look at it again and make sure that it's continuing to see those type of numbers. And since we can look at them on a month-by-month basis, we can see whether or not there's been a shift or not.
Yeah, the data is very important. And there's different types of data that funnel into AirDNA or Mashvisor or transparent intelligence. And so when you are working and understanding these numbers, work with a financial advisor who's seen and understands the market, because you never know where they're pulling their comps from, what other people have listed. And generally it's a prior performance of occupancy and, pricing of other Airbnbs or sometimes it's just Airbnb like it is on AirDNA, or it's other OTAs, online travel agencies like VRBO, Booking, Expedia, whatever. But you never know actually whose property is listed. Maybe they had it listed for half a year because someone was staying there, or maybe they had their prices really low because they were just trying to get as much money in as possible, so all those factors really kind of determine. So and sometimes you'll be compared with another property that's like a 2-bedroom, if this is what you're looking at. Let's say you're looking to buy a 2-bedroom in Myrtle Beach and your comps were not performing very well because the design wasn't great. So then you really have to think about those factors when you're looking into those markets and where the data is coming from.
Cool. We actually just got one more, so I'll make this one the actual last one. We had 2 questions around regulations. So how are you handling regulations? I guess that's specific to the markets that you guys are in. And then how should people screen other markets for regulations?
Yes, there's an incredible company out there right now, and it's on the tip of my tongue, but I'm gonna give it to you guys in the slider to send out. But it's a phenomenal resource of the local Airbnb community. The other one that I'm the ambassador for, Astro, that's Astro, is a nonprofit association that's just giving you all of this useful tools and knowledge that you need to know, whether it be insurance or regulations and rules and how they're shifting and changing. I mean, even during this COVID in March in Seattle, there's different long-term lease rules and regulations, or whatever that's called in real estate. I can't forget it at the moment, but it's like basically they were given tenants rights after 15 days, and so it actually shifted it so dramatically that everyone had to change and add more rules and regulations on the back end of their leases that they signed through people with Airbnb, just so somebody couldn't stay there for more than 16 days and suddenly never have to be kicked out. Like, that's kind of tricky, right? So it's always shifting, and it's great to have these online networks that update in real time.
I can add something there on the regulatory environment. I mean, you really have to dive into the individual city laws, and and now it's probably not the best time to take this approach, but if you actually walk into City Hall and sit down and find the right person, not all of them are the most helpful, but some of them will actually really know the regulations well and will be happy to sit down with you. So probably a tough strategy now with a lot of stuff closed, but something later on that you could do. The regulation website, someone just asked, Ellie's going to send that after, and I'll blast that out in the email tomorrow so that everyone has it. Rebecca, Ellie, thank you for taking the time to speak today. This was awesome. Everyone, we're going to stick around for the breakout room, so we'll all break out into smaller groups so people can actually get to chat and unmute yourselves on your mic. And we'll just do 2 quick breakout rooms for a couple minutes each to try to replace some of that in-person networking that we have. And I'm going to send out the presentation tomorrow, so it'll have Rebecca and Ellie's contact info in case you guys do have any questions. So thanks, guys.